Good morning and welcome to Dark Gamma's pre-market analysis for April 7th, 2026. We are coming into the session with the ESP 500 trading at 6,614, essentially flat against Friday's close of 6,611.83 cents, a gap of just over 2 points to the upside. Now that gap is nearly invisible, but the structure underneath it is anything but quiet. We have max pain sitting at 6,550, a full 64 points below current price, which tells me the market is carrying some overhead tension heading into the open.
Exactly right, Samantha. And when you layer in the expected move for today, 47.7 points in either direction, you get a range running from 6,564 on the low end up to 6,659 on the high side. So the upper bound is only about 45 points above us right now. That asymmetry matters. The bulls have very little room to run before they hit the ceiling of the expected range, while the downside has a wider corridor before we even touch the lower boundary.
And that lower boundary, 6,564, is sitting just 14 points above max pain. So if we see any kind of selling pressure today, that gravitational pull towards 6,550 becomes a very real conversation. Dark Gamma's framework would flag that zone as the key area to watch. If price drifts down towards 6,565, you want to be paying close attention to how the tape behaves around that confluence.
On the sector side, the story is defensive and a little cautious. Utilities are leading the pack, up over 2%, which is not the kind of leadership that screams risk on appetite. When money flows into utilities ahead of the open, the market is quietly hedging. On the flip side, consumer staples are actually the weakest sector, down 1.34%, which is a bit of a contradiction. You would normally expect staples and utilities to move together in a risk-off rotation, so that divergence is worth monitoring through the session.
Turning to the Magnificent Seven, the picture is mixed but leaning constructive at the top. Apple is the standout, up 1.81%, followed by Alphabet at 1.07%, and Amazon just under 1%. Microsoft and Meta are barely moving. The concern comes from the bottom of that group. Tesla is slightly negative and Nvidia is down 0.5%. Given how much gamma exposure is concentrated in those two names, even a modest drift lower in Nvidia could add weight to the broader index if implied volatility starts picking up.
So pulling it all together, we have a near-flat open, a defensive sector rotation, and a Magnificent Seven that is split right down the middle. The SP 500 has roughly 45 points of upside before it tests the ceiling of its expected range, and about 50 points of downside before it lands on max pain. Dark Gamma's lens here says watch 6,565 to 6,550 as the critical support corridor, and 6,660 as the resistance cap.
Well said, Billy. This is a session where patience is a position. The gap gives us nothing directional on its own, and the options market is telling us the range is defined. Stick with the levels, respect the max pain gravity, and let price confirm before committing. That's the Dark Gamma way. We'll be back with updates as the session develops. Stay sharp out there. On today's macro calendar, the main event is Chicago Fed President Austin Goolsbee speaks at 12:35 p.m.
These releases could drive volatility at the S&P 500 open.
The Magnificent Seven are painting a mixed picture this morning, with 4 names in the green and 3 slipping into negative territory ahead of the open. The overall tone for big tech is cautious but not alarming, with gains staying relatively modest across the board.
Apple is the clear standout, up nearly 1.8%. which is the kind of move that pulls weight given its size in the index. That alone could provide meaningful support to the SP 500 at the open. On the other end, Nvidia is the biggest drag, sliding about 0.5%, which may reflect some profit-taking after its recent run.
Worth flagging on the macro side, there are reports of explosions heard on Karg Island in Iran, which is a critical oil export hub, and that kind of geopolitical flare-up tends to inject uncertainty across risk assets quickly. Tesla is also slightly in the red, down about 0.1%, so between that and Nvidia, the momentum names are struggling to find footing this morning.
Meta and Microsoft are essentially flat, up just a fraction of a percent each, so the green in this cohort is really being carried by Apple, Alphabet, and Amazon. The tech sector tone reads as selectively constructive, leadership is narrow, and the geopolitical headline adds a layer of risk that traders will be watching closely into the session. Before we continue with today's analysis, we have a quick message for you.
Don't go anywhere.
Want to see exactly what institutions are doing in the market in real time? Then this is for you. Exclusively for members of the Dark Gamma community, the SPX trading platform is currently in beta, and access is completely free until the official launch. Go to the link on screen, sign up, and in the discount field, enter the code shown on screen to also activate 1 free month on the institutional levels bot tool. From the platform, you will see the complete market X-ray, institutions trading live, liquidity zones, points of interest, unusual positioning, everything that moves the price of SPX visible on your screen in real time. No prior experience needed. Just get in, explore, and start seeing the market the way institutions see it, like you never have before. Take advantage of this access before it closes.
There's your invitation. I forgot to mention that both Billy and I are there with you in real time with our AI analysis of unusual positioning and other key metrics.
That's right. See you there. Now let's get into today's earnings.
Kicking things off with tonight's after-hour session, Levi Strauss headlines at $2.0 billion in market cap, carrying a beta of 1.47 and an expected move of 6.7%. Meaningful volatility for a consumer cyclical name in this tape.
Right, and with discretionary spending under pressure, any softness in denim volumes or margin guidance could easily push it toward that upper bound of the expected move.
Also reporting tonight are AEHR test systems with a wide 11.2% expected move and Greenbrier companies with a tighter 4.8% move, both smaller names, but worth watching for sector read-throughs in technology and industrials.
Shifting to tomorrow morning, Delta Airlines is the standout at $43.6 billion in market cap, a beta of 2.05, and an expected move of 5.2%, the largest print of the two-day window and a potential macro signal for travel demand and fuel cost absorption across the industrial space.
Escalating tensions between Israel and Iran are front and center this morning, with explosions reported on Karg Island, which is a critical oil export hub for Iran. This could send crude spiking at the open and drag equity futures lower as traders price in a risk-off environment.
Absolutely, and the damage sites reported across Tel Aviv, Ramat Gan, and Petah Tikva add another layer of uncertainty that typically triggers a flight to safety in gold and treasuries. Watch for the SP 500 futures to gap down, with gamma exposure at key strike levels potentially amplifying that move.
With 0 days to expiration contracts active today, market makers will be scrambling to delta hedge into any sharp move lower, which could exaggerate selling pressure in the first 30 minutes of the session. Open interest around the 4,900 strike is worth monitoring as a potential magnet or breakdown level.
Energy names and defense stocks should see a bid at the open, while airlines and consumer discretionary are likely to face early pressure given the crude spike risk. The Istanbul consulate detail suggests diplomatic channels are already strained, reducing the probability of a quick de-escalation that markets might otherwise rely on.
Digging into the SP 500 structure, the closest call wall is sitting at 6,690. Where open interest surged 1,421.7% overnight to 8,415 contracts. That kind of aggressive single-session build screams freshly positioned resistance, likely acting as a ceiling dealers will defend into the close.
On the put side, the nearest meaningful strike is 6,200, up 327.6% to 6,324 contracts. But honestly, that is a full 414 points below spot, so it offers only distant floor support. The more alarming print is the 5,400 put cluster, where one series exploded 8,169.7% to 30,267 contracts, flagging serious tail risk hedging activity.
With spot at 6,614 and max pain dragging at 6,550. The gamma exposure picture favors a gravitational pull lower through today's session as dealers delta hedge against that massive call open interest build at 6,690. Resistance at 6,690 to 6,700 is now the hard zone to watch, with no credible put support until well below current levels.
The put-to-call ratios across all three near-term expiries are running between 1.47 and 1.94, confirming the market is skewed heavily toward downside protection rather than upside participation. Traders should treat 6,690 as the key intraday line in the sand and monitor whether that open interest holds or gets unwound, because a failure to reclaim it flips momentum squarely toward the 6,550 max pain magnet.
Kicking things off with the SP 500 0 days to expiration picture, spot is sitting at 6,614, which puts us well above the gamma flip level of 6,489.1, meaning dealers are in positive gamma territory and will be actively fading big moves today.
Right, and that gamma flip is essentially the line in the sand where dealer hedging behavior flips. Below it, they amplify moves. Above it, they dampen them. So with spot this far north of 6,489, expect a tighter, more controlled tape at the open.
The put wall at 6,550 is your downside magnet, where the heaviest open interest inputs clusters, acting like a gravitational floor if sellers push the market lower intraday.
Meanwhile, the call wall at 6,690 is the ceiling to watch. That concentration of open interest will create heavy dealer selling pressure into any rally, so the market is essentially sandwiched between 6,550 and 6,690 for today's session.
Tracking institutional footprints. The dominant liquidity level over the past year is the 6,739 level, above current price, with maximum liquidity concentration over 27 sessions.
These levels represent zones where the highest institutional liquidity has accumulated over the past year, making them key support and resistance areas for S&P 500.
Over the past week, the level with the highest active liquidity is the 6,529 level, below current price, with maximum liquidity concentration over 3 sessions. Recent activity confirms strong institutional interest in this area.
When price approaches these levels, watch the market's reaction closely. These are zones where major players have left a significant liquidity footprint.
Here is the complete level map for today's session. S&P 500 is at 6,614, above the gamma flip at 6,489.
1 sigma range, 68% probability, goes from 6,564 to 6,660. 2 sigma, 95%, extends from 6,516 to 6,707.
On the GEX side, call wall sits at 6,690, structural resistance. Put wall at 6,550 is where dealers become forced buyers.
The top institutional whale levels nearby are 6,648 and 6,633. These are the highest liquidity concentrations in the market. Expect reactions there.
Breaking activity on the dark gamma institutional scanner today, with 9 large entries flagged across multiple tickers. Leading the flow is ExxonMobil, where a call position at the $165 strike expiring May 2026 drew a premium of $12.88 million, with over 10,800 new open interest contracts hitting at 74% of the ask. Right behind it, Intel is seeing notable put activity at the $50 strike, same expiration, pulling in $9.15 million in premium across 16,496 new contracts at 72.4% of the ask.
2 more names worth watching. Samantha, AXT Incorporated, ticker AXTI, saw a call sweep at the $60 strike for May 2026, representing $6.17 million in premium and 6,575 new open interest contracts, executing at 75.7% of the ask. And Nokia, NOK, picked up a call position at the $9 strike running out to June 2026, with $3.09 million in premium and a striking 41,919 new contracts, printing at 80.6% of the ask, the highest ask percentage in today's scan.
Looking at sector concentration, the flow today spans energy with ExxonMobil, semiconductors with both Intel and AXTI, and telecom infrastructure with Nokia. 3 out of 4 of these institutional entries are calls, with Intel standing alone on the put side. That skews today's detected positioning heavily toward the bullish structure, at least in terms of contract count and premium volume, with over $31 million in total premium captured across these 4 highlighted entries.
It is also worth noting that all 4 contracts share a long-dated expiration window clustered in mid-2026, suggesting these are not short-term tactical plays but rather extended duration structured positions, which is a pattern the scanner flags as characteristic of institutional rather than retail origin. On the confirmation side, 0 previously detected contracts reached the 20% open interest growth threshold today, meaning all eyes remain on these fresh entries as the market continues to develop. We will keep tracking these across sessions right here on Dark Gamma.
Breaking market flow data here on Dark Gamma. Our scanner has flagged a new institutional contract entry today on ExxonMobil, ticker XOM. The contract in question is a call option with a strike price of $165, set to expire on May 15th of 2026. Total premium registered at the time of detection came in at $12.9 million, making this one of the larger single flow entries tracked by our system today.
That is a significant flow, Samantha. Looking at the volume side of this entry, our scanner registered 21,967 contracts at the moment of detection. The institutional average entry price on the premium was $5.86 per contract. Open interest is currently sitting at 32,883 contracts total, with 10,860 of those being newly added positions flagged alongside this entry.
Now here is an important data point to understand in context. The current contract price as of this report is $6.45 compared to that institutional entry price of $5.86. That is a difference of 59 cents. In terms of how our scanner evaluates flow setups, what analysts generally consider an ideal tracking condition is when the current contract price is near or below the original institutional entry price, with open interest that is flat or growing. In this case, the current price is slightly above entry and open interest is showing growth, which keeps this contract within the observable range our system flags for continued monitoring.
And finally, for context on the underlying stock itself, the break-even price on this position at expiration is calculated at $170.90 per share. That figure represents the level at which the value of the contract at expiration would offset the premium paid at entry based on the institutional average of $5.86. That is the data picture on this XOM call flow as captured by the Dark Gamma scanner today. We will continue monitoring for any updates.
If you want this level of market intelligence every single day, join Dark Gamma right now. Bots working for you, whale levels, real-time institutional positioning, opportunity scanners, and gamma exposure updated by the minute. You also get access to institutional liquidity and options levels for any ticker ready to drop directly into your TradingView indicator. Exactly where institutions are positioning. No noise, just data. Dark Gamma is the edge that separates winning traders from the rest. The information that moves the market in your hands today. The link is in the description. Click it now. We'll see you on the inside.